You're listening to Indications by the Conference Board.
We will be looking at or discussing how governments are using finance to address the Russia-Ukraine conflict. We will learn about financial sanctions and how they are affecting markets and business operations. We will discover the importance of alternatives to SWIFT and traditional credit, plus crypto assets amid the war. Finally, we're going to gain insights on financial risks to businesses affected by this crisis. I'm proud to introduce our two guests. I'm your moderator, Dana Peterson. We have Dr. Lori Esposito Murray, who is the president for the Committee for Economic Development of the Conference Board, also known as CED. We also have Hollis Hart, who is a former president and international franchise management at Citi and one of our senior fellows. It's really great to have both of you here. So thank you for joining us. So let's jump right into the conversation. So first question for you, Lori, where are we in terms of the war on the ground?
So, Dana, it's important to step back first and for our audience to recognize that we are really at an historic inflection point, and how this ends will determine not only European security, but global security. There are tectonic shifts taking place because of what's happening in Ukraine. And for Russia's president, Putin, it's actually personal. This is probably the biggest risk he's taken and will probably determine his future as much as it will determine Russia's. So there are the two battlefields, and one is what's happening on the ground. And in order to understand that, go back to 3 weeks ago, Russia had a 10-1 advantage over Ukraine in terms of military power. It had moved 146 of its 178 battalion battle groups to the border of Ukraine, and most of those are actually inside Ukraine right now. And yesterday, the Pentagon used the word near desperate to explain Russia's position. So with that overwhelming advantage, Russia's position in Ukraine right now on the ground is being called near desperate. Their combat strength has diminished to 90%, so they've lost 10% of their military personnel in the battle. There were 150,000 troops there. They were originally intending to take Kyiv, get air superiority, take Kyiv within several days at most, replace the government of President Zelensky. And that has not happened 3 weeks in. They're near desperate. And we are now in a war of attrition where you're seeing indiscriminate deaths of civilians and attacks on civilians, mostly through missile and artillery fire, because they never gained that air superiority. And they're very large forces, their tanks, as everyone has seen on the news. The columns have been blocked, and they've become very vulnerable as well. This has a lot to do with the passion of the Ukrainians in terms of defending their nation and their sovereignty. It also has to do with the defensive lethal systems that the U.S., NATO have sent them, which include Stingers, which was absolutely significant in terms of stopping and forcing the Soviet Union to leave Afghanistan. When we supplied Stingers to the Mujahideen, proving to be anti-aircraft systems are proving to be as significant in Ukraine as well as the anti-tank systems. So what's working against the Russians, along with the passion of the Ukrainians and the forces they've been supplied with? The weather got warmer, the ground got softer than they had intended. They have a top-down structure so that when these columns stop, you have generals having to move to the front, and you're seeing major significant leaders actually being killed after they're targeted by the Ukrainian forces who are working locally and very familiar with the territory. And it's really tragic to see how this has shifted to a war of attrition, and we're seeing the escalation on attacks on innocent civilians.
So how has the international community responded to the invasion?
So that's the second battlefront that we're talking about today. Which is the financial battlefront. And the reason why this is a dual battlefront is because throughout our Cold War history and our post-Cold War history, because the U.S. and Russia are the two nuclear superpowers, we have really U.S., NATO, And up until recently, even Russia have tried to avoid direct conflict. This is part of our history since 1950, the limited war approach that we saw in the Korean War that set out that type of doctrine in order to avoid direct conflict between the U.S. and the Soviet Union, now Russia, because of nuclear weapons and not wanting to escalate to that level to prevent that type of escalation. And so because of that, the U.S. and NATO and our allies and partners around the world have really turned to a strategy of financial sanctions and supplying defensive lethal systems to the Ukrainians and diplomacy. But the financial sanctions are the heart and soul of what the response is in terms of first trying to deter Putin and now trying to make sure he doesn't, both to punish Putin and Russia, make sure they don't achieve their strategic objectives in Ukraine. So what are the key sanctions? It has been a series, and deliberately a series, of calibrated sanctions rolling out. And where we are right now, I want to emphasize the most important sanctions that are having an impact. And the banks, the sanctions on the banks and kicking Russia out of SWIFT. Which is the messaging system for financial institutions, the global messaging system to move money globally, and kicking Russia out of SWIFT is very significant. When Iran was kicked out of the SWIFT system, they lost about half of their oil export revenues and about 30% of their foreign trade. Probably most significant are the sanctions on the central bank. And what you saw between 2014 and today was that Putin really trying to protect the Russian economy against future sanctions as he pursued his more aggressive ambitions in Ukraine, as well as he has stated his, further into other NATO countries countries that are now part of NATO that were once part of the Soviet Union. And so the central bank, he had actually built up the reserves to about 640 billion of reserves so that they could stabilize the ruble, protect themselves from global sanctions. And the central bank sanctions, as well as the sanctions on the banks and SWIFT, but the central bank sanctions were actually, I think, not expected, came as a surprise, and probably are the most impactful. And what we've done is freeze the central bank's transactions and make it impossible for them to liquidate their assets, which means they can't support the ruble. And so you're seeing inflation as a surprise. They're being hit with impacts on their economy, which then trickles into the stock market was shut down. It was only just recently set up. And the head of the central bank just 2 or 3 days ago said, as well as President Putin telling the Russian people at that big stadium to expect a recession, inflation, and pain, but that the economy would adjust as they work to adjust to these, I think, what were very much unanticipated sanctions. The other sanctions that are very important that aren't getting as much attention are actually the export controls. And whereas there may not be an absolute immediate impact on that, the export controls on high-tech exports actually will be debilitating to Russia's economy advancing in the future. And we've done these sanctions, of course, with our NATO allies, with the EU. About 40 countries around the world have joined in sanctioning Russia. And these technological curbs, the administration has said, would actually block roughly about a fifth of Russian imports. And the most important of the components here is the foreign direct product rule. This was the rule that President Trump used in order to push back against Huawei. And you saw it's if any product has U.S. origin software or technology, it can't be sold to Russia. And so when you saw this with Huawei, Huawei basically collapsed when the foreign direct product rule was used. And this is what President Biden is now using in terms of these tech sanctions against Russia. And they're going to have a very, very hard time advancing in terms of meeting the demands of their current technology needs, semiconductors, but it's technology that has any U.S. origin software. So immediately it's going to have an impact, but even more seriously long-term in terms of advancing their economy and being able to utilize technology to do that, it's going to have a pretty important impact. And of course, there were sanctions against the oligarchs, and we've just started ratcheting up the oil and gas sanctions with the U.S. embargo, which is about 6 or 7% of our imports. I do want to point out, though, that as significant as the sanctions that the governments have imposed are what the companies are doing, private business. About 400 companies have either left or have curtailed their operations in Russia. And this is having a tremendous immediate impact on the Russian economy. This was also, I believe, unanticipated on the part of President Putin when he was making the decision to go into Ukraine. And it is as significant, if not more, in terms of hurting the economy than even the sanctions themselves.
So I read in the news this morning that the Biden administration is also sanctioning the political class in Russia. So sanctions on the lower house of their government. What does that mean? Do you think that this is really significant in terms of moving the needle, or do you think that they're just going to kind of dig in and go along with President Putin?
Well, it's on the part of the United States and NATO or allies and their partners, this rollout is very deliberate. It's ratcheting up the sanctions as Putin is escalating in Ukraine. And at this point, he's escalating in terms of his attacks on civilians as he's getting more stuck there in terms of how he's actually implementing the war. But he's also escalating and preparing the groundwork for moving to unconventional systems. He's obfuscating and creating disinformation about chemical weapons, biological weapons being in Ukraine. He has threatened escalation. He said that he was putting his nuclear forces on higher combat readiness 2 or 3 weeks ago, as these very hard sanctions were hitting. And so what you're seeing is the administration and our allies and the U.S. and our allies and our partners calibrating and ratcheting up and the next step, and that's why the president is there to prevent this escalation to these unconventional weapon systems is main part of the agenda is what sanctions do we do next, putting the sanctions on the Duma is something that the EU has already done. And so one of the objectives of the president's trip is to have us all try and collaborate as much as possible in terms of the sanctions that each of us are doing. And so ratcheting up by collaborating that way, ratcheting up by making sure that we're closing loopholes. National Security Advisor Jake Sullivan was very clear that that's part of the goal. And I think you're also going to see at least discussion in terms of how to ensure that China gets a very strong message, maybe not actually moving out on sanctions that would hurt China, but that China gets a very strong message from the U.S., NATO, allies, and partners about what would be the consequences if they did engage and help be even more of a lifeline to Putin and Russia's economy.
So we haven't really seen strong sanctions on energy, grain, and metals, especially on Russia. Why is that the case? Is this linked back to governments from the West trying to mitigate the effects on their own economies?
Oh, well, that has been a principal goal, that the sanctions we do from the outset, the sanctions we do don't hurt us, meaning the West, and the nations imposing the sanctions more than it hurts the Russian economy. So that's been a clear goal. And also put in perspective, the sanctions that we have put in place are the most severe sanctions we have ever seen, especially against an advanced economy. So these are very severe sanctions. And why are energy, grain, metals exempted? So it is evaluating what the impact would be in terms of its impact on the nations imposing the sanctions. And obviously Europe, as we all know, is very dependent on Russian energy. In terms of grain, Russia and Ukraine together produce nearly a quarter of the world's wheat. They're key suppliers of barley, sunflower, seed oil, corn. Even without sanctioning that, you're seeing a tremendous impact in terms of the prices of these products, the supply of these products, of these commodities worldwide, and alarm bells being rung by the UN in terms of it actually causing a famine in certain areas of the world, since these grains are an important supplier to the World Food Program. So striking that balance, in terms of the rare earth minerals, 45% of palladium, comes from Russia. You see other rare earth minerals that are used in electric vehicles and mobile phones, coming from Russia. And Ukraine itself produces 70% of the global supply of neon, which is used in making semiconductors. So, really significant products for the world economy. So obviously not on the first list in terms of what you're going to hit, but I do want to emphasize that these sanctions are very severe, plus the impact that the private sector is having on the Russian economy is very severe, even without the sanctions here.
So I guess that leads to two questions. How bad can the sanctions on Russia get? And do sanctions work? I mean, we've seen Iran and certainly Russia post-Crimea were smacked with sanctions and they appear to survive.
But in your first part about how bad can they get, there is still room to do more sanctions. And but they have, very carefully, they have to be very carefully calibrated at this point in terms of what direction you go. But I think what you are going to see is obviously the sanctions on more people to try and influence decision making. The problem with Russia is that whether it's on the oligarchs or the politicians, the members of the Duma, the problem with Russia is that this is really an autarky with Putin very, very much in control. And and there's a lot of analysis about the oligarch sanctions, which applies to sanctions against people, is that the oligarchs are probably more dependent on Putin for their financial position, and their resources and finances than the other way around. And so, but you'll see more sanctions on people. Closing loopholes, as I mentioned, that has obviously been stated as a goal. Clearly on the table is secondary sanctions, which had a tremendous impact on crippling the Iranian economy, where the United States just sanctions on a secondary level itself. You can't do business with the United States if you're violating these sanctions. And you may see more happening maybe in the oil and gas area as Europe tries to recalibrate its dependency on Russian oil and gas, but that's a little bit down the line. And then again, trying to make sure, calibrate and collaborate in terms of sanctions that the EU has done and apply those to the US as well and vice versa. Do sanctions work? What's so fascinating is Iran is an excellent example of the impact that sanctions have on the economy. So do sanctions hurt an economy? I think Iran is an excellent example of how it does, but does it change behavior is the question. So addressing the issue of the impact on the economy, as I mentioned, when they were cut from the SWIFT system, they lost about half their oil export revenues and 30% of their foreign trade. But remember that in 2015, so between 2011 and 2015, we had severe sanctions against Iran. We then lifted those sanctions when they signed the nuclear agreement and then reimposed those sanctions in 2018. So that's why it's such a perfect example to see the impact on the economy, because during 2011 and 2015, Iran's economy contracted approximately about 20% over that period, and the unemployment rate was 20%. But once the sanctions relief happened, they were able to achieve about in 2015, 2016, when they were lifted, between the 2016 and 2018 period, they were actually able to achieve a 7% annual growth. And when they were reimposed in 2018, by the U.S., the economy declined by about 8%, according to the IMF, between 2019 and 2020. So, yes, can sanctions, and particularly Iran's an example because they were kicked out of the SWIFT system, sanctions on their banking sector, it can have a tremendous economic impact. I think they also had an impact on Iran's behavior on a specific issue. So the goal was their nuclear capability, and it had a very significant impact in rolling back their nuclear capability from being able to have a breakout which is how the international community estimates capability, a breakout capability of having a nuclear weapon within weeks or 3 months to over a year, which was the goal of that agreement. So you had progress in a specific area. Progress in terms of Iranian behavior overall, it was not as successful. Sanctions were not as successful. Iran never fell off their mission, and as a state, as a as a government in terms of what their goals were as far as their foreign policy and international relations goals.
Thank you, Lori. Really hard hitting. We're going to switch over to the second part of our conversation with Hollis Hart. So, Hollis, what has been the reaction of Russia to the sanctions and the divestment?
Well, let me just back up just a moment, David, and I'll answer your question. But I think Lori made a couple really critical points. I think there was a surprise at how quickly nations got together and coordinated on the sanctions, and I don't think that can be underestimated. The 400 private sector plus and growing that have taken action, I think that was a surprise at the pace. And the third, Lori talks about two battlefields, and I think that's absolutely right. As I approach things, I have a third battlefield, but it's more of a future or virtual one, and that particularly includes China, in the sense that I believe that much of what we're doing today and the context of how I respond does have to do with the fact that I think China is watching this incredibly carefully and has some very strong aggressive views on what it may or may not do, or unfortunately more likely may do in the near future. In terms of the Russian reaction, and again, as Lori pointed out, since 2014, Russia has been dealing with sanctions, so there was the preparation. The fact that 50% of their reserves were not accessible has caused them issues. They've found fewer workarounds than I think they expected from that point of view. What has happened is that the systems available to them, and we could talk about that a little later, are much cruder than using the systems that they were using. The partners have been very cautious. Even countries that have been on the fence, such as India and Turkey, and even Iran, have been more limited in terms of the support they've had. So in terms of the reaction, Russia's clearly unhappy, surprised, blindsided, but is finding some of the avenues they thought available to them more limited, and the tools they had, the ones they're using now, much cruder.
So how exactly has Russia been able to circumvent sanctions? For example, alternatives to SWIFT or crypto assets, or even tapping into China's financial system?
Well, let's take those one at a time. And the last one, much has been made of the fact that China has created since 2015 a global payment system called SIPS. Now, right now, it's virtually all Chinese financial institutions, with only a handful of foreign institutions that have linkages. This will, I would anticipate, accelerate, in fact, the participation of foreign institutions. And right now, I would have to believe that the Russian banks and financial institutions have quickly accelerated their adoption of the SIPS technology. And so those linkages would be there. But that represents maybe 5% of the functionality that SWIFT represented. So that does exist. SIPS is potential. It will grow. This is going to, in fact, create greater usage of that. But right now, it is very small and very crude. So that's not a great alternative. Inside of Russia, Visa and MasterCard, as you know, shut down their systems. But again, in the 2015, 2016, Russia created a system called MIR, M-I-R, for internal payments, so they can use that. Is it as useful, and is it have the functionality that MasterCard and Visa had? No, but it's there. Crypto makes for a great story, and it's true that, in fact, Russia has, both at a public sector level and at a private sector, a considerable amount of activity in the crypto world. But again, that's an incredibly crude and inefficient tool. China banned crypto, as you may know, although I suspect on the public sector side, they're doing things sub rosa. Russia's central bank had recommended banning crypto, but they ended up, in fact, instead deciding to regulate it. The usage, though, there was a spike in late February of crypto activity, 200 to 400 million a week, according to Chain Analysis. However, the size of the tickets were very small. So it wasn't oligarchs, it wasn't large state-owned sponsored organizations, unless it's very small ticket. Elizabeth Warren and Warner have introduced legislation in the Senate and there's also legislation in the House to address Russian crypto, and it would be generally through IP addresses, the address that we have for all of our emails. That's more symbolic at this stage than it is functional. So crypto, while they can be used for ransomware and they're doing some mining, at this stage is just not an off-ramp that they might want to be using. So fundamentally, the tools that are available to Russia today are in fact fairly limited. They're being impacted. The liquidity is not there. As Lori mentioned, the ruble went from 75, it actually spiked as high as 150. I think it's trading in the 105 to 110 band, but that's a massive impact on inflation for the economy. But so it's fair to say that the workarounds exist. They will get better. We have to anticipate that. And again, China is watching that. The end result will be we will see more divergent tools and technologies available in the future, but today it's very limited.
Hollis, I was wondering if you could just define for our audience, what do you mean by crypto assets, and what are some of the crypto assets that are being used, maybe not universally, but certainly to some extent in Russia to get around, or well, to navigate the financial sanctions?
Well, this will reflect a little my bias. Crypto assets, I think of them rather than coins or currency as chips, as in Vegas. They've actually been around in concept since the early 1980s. And in the early 1990s, there were some digital. It's the creation of a currency not sponsored by a government. It's in a digital form. It has no physical, almost never has a physical substance. The most famous one started in 2008, the high-profile one, Bitcoin, when Satoshi Nakamoto wrote a paper in January of 2008, and it actually went live in the beginning of 2009. But these, again, are incredibly crude tools. Most of them use a technology called distributed ledger or blockchain, and they're digital, they're virtual. There are right now about 18,000 of these around. Bitcoin is the high-profile one, and the ability to be able to transact with them is incredibly inefficient. There are a number of people who will accept a digital coin or chip is limited. The size is limited, and while they talk about speed, it takes a long time to be able to get an individual transaction done. Right now, for example, most of the exchanges which get used will require up to 6 confirmations before they'll actually transfer the chips. And one of the biggest problems with the crypto is what I'll call the on and off ramps. People can move crypto around, but when they want to go to a currency, it becomes a real problem for them. Just a second. Hopefully that's not Russia. So the challenge, and that's when the anonymity breaks down. So the digital assets, again, it's in a couple $100 million range. It's not large enough to be able to substitute for the material impact that that has taken place.
So there's this famous map that Lori's used in other presentations of kind of all the economies that have imposed financial and other sanctions on Russia. And so who is vulnerable to potential Russian retaliation, and what would be the mechanisms? For example, cybercrime, or cutting off natural gas access, or even military intervention for economies that are super close to the region.
Well, let me break that down in the component parts. I think there's a high probability that we will see, as Russia gets cornered and Russia is more damage is inflicted on Russia, that they will use tools at their availability. They've invested as heavily as any of the top 3 or 4 countries, and I don't put the United States in that, in industrial strength cyber activity. So that should be expected. The smart people that I know who are heavily in the cyber have in fact gone to the point of topping up their cars with gas and actually carrying more cash in case there is a 2, 3, 4, 5 day incident. So the answer is there is an expectation that there's a risk of cyber damage coming. That may be too negative, but it certainly is something that should be in the calculus. People have increased their cash and liquidity buffers at institutions. They've also increased their cyber hygiene reminders from that point of view, made sure that they've got backups. It's highly probable. There's been, I think, a view that to date Russia has been a little cautious. My understanding is the Biden administration had very early on indicated that there were certain things that the Biden administration felt that the U.S. could do if Russia did. And there's a perception that perhaps we've held back a little, and that has encouraged Russia to date to hold back. Military invention, I mean, that's a maybe more Lori's area than mine. I worry on the big picture more about China at this moment. I think that's something we just have to keep our eye on. If they cross the line into a NATO country and the Article 5 gets triggered, that I think it's a complete game changer in terms of a physical kinetic attack. But I will defer to Lori on that.
How can firms protect themselves from financial risk exposure to the war and any possible retaliation? I'm asking you this given your storied history as a senior person in risk at the largest bank on the planet. So, what advice can you provide for our folks who are listening?
Well, I think you have to have a game plan for how this plays out, and with each country or with each business activity, you really need to have in place today or yesterday really the plan A, plan B, and plan C for being damaged. There should be an expectation of damaged operations and then your backup systems. Cyber clearly is an area of high vulnerability. It would be an issue of game planning what your alternatives are today if systems go down, and those have to be in place. They have to be communicated. And a small suggestion I would make is, as Luddite as it sounds, it needs to be in paper as well as electronic, all of your backup game planning, because if your systems go down and people can't access, they default to paper. And I know that sounds very primitive and very basic, but you'd be surprised how many people have developed a reliance on always having electronic access. One of the critical areas that, if folks haven't done, should be doing, is looking at the third-party vendors and suppliers, and particularly their secondary vendors and suppliers. The vulnerability and the surprises there, as I think Lori alluded to, one of the unpleasant surprises was how much EU companies and firms were dependent on Russian parts and labor and services. I think this is something, as we look at on a global basis, people have done an okay job on average looking at the third-party vendors, but the vulnerability here, and particularly if there were to be secondary sanctions, is very high, and that's something that does need industrial strength attention. That would be absolutely a must-do immediately.
So here's a question for Lori. Curious as to other countries joining NATO, such as Sweden and Finland, and the impact on the crisis.
That's a really interesting question, Dana, because it has tremendous symbolism that these countries that have been historically neutral are considering and actually debating joining NATO. And yet it shows you how these tectonic shifts are happening in Europe and in terms of European attitudes towards Russia. I mean, the dramatic changes in terms of this is an incredible turning point. But I also want to caution that Sweden, Finland, Switzerland, really important countries as neutral countries during the Cold War, because they played a diffusion role in tensions, and they were a place where discussions could happen, or they served as intermediaries. And what you're where we are heading into now is a pretty, divided, with no intermediaries, no one who could really talk, in terms of Europe and Russia's European borders. So it's a dangerous area we're going in, and on the other hand, it's also very symbolic of the fact that the danger of this evolution and the importance of this decision that Putin has made to roll into Ukraine with 150,000 troops is having on how Europe is perceiving its security and its need for even more unity under the NATO umbrella, as well as the individual European EU umbrella as well. I do, if I could take the liberty of also adding a point that, that's really important in terms of Russian workarounds and sanctions. I do really want to underscore that we have half of the world's GDP, nations with half the world's GDP involved in sanctions with Russia. But we also have half the world who isn't. And, that includes, so how is Russia going to do workarounds? One is trade with, obviously, China has received a tremendous amount of attention, but also its relationship with India is extremely important. And it's not just about this $5 billion sale that India had just done on missile defense systems, the S-400s. India has had a long-term, long-standing relationship throughout the Cold War and after in the post-Cold War period with the Soviet Union and Russia in terms of its arms. 25% of Russia's total arms exports go to India, and Russia provides about 50% of India's imports. And what also hasn't gotten much attention is that Putin actually visited India in December. In terms of if you're looking back in terms of preparing for a invasion of Ukraine, and they had actually made a commitment there that they would increase their trade to $30 billion, and talked about by 2025, and talked about the importance of that relationship. And then, of course, you have Latin America, Asia, countries that are not involved in the sanctions regime that are basically in a wait-and-see mode.
Thank you, Laurie. I'm glad you brought that up. Given China's brushing off of U.S. sanctions regarding Xinjiang and Hong Kong, both red lines for Beijing, what sanctions can U.S. impose on China if it supports Putin materially? And would any meaningful sanctions on China cause a significant global recession?
Well, I think what you could read between the lines that we are in the statements about severe sanctions, severe consequences of China actually provides a lifeline to Russia, is that we're seriously considering secondary sanctions on China, and those are impactful, and is something that Xi Jinping and China have to take into serious consideration. As on the other hand, we're also threatening them, and so they too. What's interesting about sanctions, and as Hollis was saying, we're going to see going forward, is every time sanctions are imposed, both Russia and China were looking very, very seriously at Iran being kicked out of SWIFT, which was something that no one ever really believed we'd go that far, that you would kick a country out of the SWIFT financial messaging, and that actually had an impetus in terms of how China and Russia were individually looking at how to circumvent sanctions and how to prepare for sanctions, as well as together talking about how they could do that.
Thank you, Laurie. Thank you, Hollis. Please check out our Geopolitics Content Hub. Everything we're talking about in terms of the Russia-Ukraine crisis is on that hub. So at this time, I just want to thank everyone for your time, and please have a great day.
This has been Indications from the Conference Board.